Gary Kelly. We're back at 69 Milk Street in Westboro. We're actually in one of the suites that is being redone for a commercial customer. And we're here with Jami Eycleshymer, who is a commercial lender. Thank you for joining us today on the show, Jami.
Thank you.
So tell me, what does a commercial lender do?
So we work with customers who are either small businesses, and a small business can really be defined as anyone with revenues up to $50 million. And we work with customers who are looking for financing either for working capital needs, which would be best financed by a line of credit, or if you need to purchase equipment, or commercial industrial use could be leasehold improvements even. Also real estate purchases, which can be owner-occupied real estate or even investment real estate. And there are...
So let me stop you on that. So I have someone that wants to buy a house and it's going to be owner-occupied. Okay, do you want to talk to them?
Is there a legal structure in place and they're buying a single-family home? Is it going to be put in an LLC for some reason? I mean, really,
those are the kinds of things that I talk to an attorney about, and I get that. I want to draw the distinction between where the commercial lender kicks in and you go to someone like Movement Mortgage. Mike Flanagan spent some time doing these with us. Where is that cutoff? Where is that distinction?
So with investment real estate or with commercial real estate, it can be a building like this where it's commercial office condos and all of the tenants are businesses, and that's a perfect application of a commercial mortgage in a commercial real estate space. Sometimes there's mixed use. You go to any town center in the suburbs and there might be storefronts on the bottom floor and then there might be apartments above it. And that can be a commercial mortgage. And whether or not the business that's on the first floor is the owner, and that could make it potentially owner-occupied space, or just someone owns the entire building and everyone in there is just a tenant, whether it be someone in an apartment upstairs or one of the storefronts on the first floor, that would be either an owner-occupied or investment real estate purchase, and you would need a commercial mortgage for that.
Okay, so those are the types of mortgages that you do. What if I'm a hairstylist and I need to do fit out for a space that I already have? Do you do notes or loans for that kind of thing?
It's funny that you say hairstylist, because I've worked with multiple salons, and some of them were new businesses, some of them were businesses that wanted to expand. One in particular moved into an 11,000 square foot space, and she's doing a lot more than just hair in there, and she's a photographer, and that was a really interesting client to work with. But there can be circumstances where we would do traditional financing, would be a 5-year term loan, most likely, for leasehold improvements. So maybe you don't own the space, but you still need to do improvements to make it the way that you're going to run your business. And we would look at the use of funds and the cash flow to determine, is this something that the bank's interested in helping you do, and does it make sense? And then we talk through the underwriting process and understand how we want to structure the loan, and put it into a payment that's going to be affordable for you, but also meeting the bank's policies. And in some circumstances, when it's a little bit more risky or it's a startup, we could get involved and partner with an SBA lender to structure it with a little
SBA, like small business?
Yeah, the Small Business Administration, which is government-assisted lending, where the government will guarantee some portion of the repayment of the debt to kind of take away some of the risk from the bank.
That's my experience, is a lot of times, if you're a small business, you try to get a small business note, you end up having to personally guarantee it. And if you're personally guaranteeing it, then why aren't you just hitting your credit card kind of thing? Do you have any...
Interest rates on credit cards.
I tee up the question, you walk through the door.
Interest rates on credit cards are typically a lot higher than what a bank interest rate would be if you're able to qualify for a bank loan. Also, a personal guarantee is a promise to work with the bank to repay the debts in the event that the business can't, or you decide not to be in business anymore. So that's basically an agreement between the bank and the business owner, saying that if for some reason this business isn't here anymore, you know, you can't just open a business, borrow a bunch of money, and then close the business the next day and think that you can run away and not repay this debt.
Right.
So the personal guarantee isn't taking out personal debt. It's
Right.
just a promise to work with the bank in
Well,
the future.
Jamie, I want to thank you for coming on the show today. I think we've helped people understand more about commercial lending.
Yeah.
Thank you.
Thank you.